Today we'll discuss about kind of fundamental analysis of stock to find the true value and whether we can hold that stock for a long term. So what that fundamental analysis basically in a brief or shortcut way. Fundamental analysis of a stock is to value investors as waiter is to fish. Fundamental analysis refers to the set of techniques investors use to determine a company's intrinsic value. As a value investor, one uses fundamental analysis to identify companies worth placing a stock in it. Okay. So this type of assessment tries to answer a few questions. Uh, does this company have profits? Can it continue making money in the future? Will it be able to hold on to its position in the market? How much debt does this company have, and is it serviceable? Each one of these questions can be a giant rabbit hole. You can fall down, but at the end of the day, the question one is really trying to answer boils down to this: what is the company really worth? Okay, so the goal of fundamental analysis, finding the intrinsic value of the stock, intrinsic value or actual worth of a company, is the holy grail of investors. Okay, in value investors are always looking for stocks that are trading at a discount or intrinsic value. The driving belief here is that the stock price given by the market doesn't always accurately reflect the true value of the stock because of informational lacks or irrational exuberance on the part of speculative investors. A company's stock price can become detached from its true value. Okay, so what drives this intrinsic value? Um, what is the step we need to do actually? We need to analyze that balance sheet. On a straightforward way is to dig into the financial statement of a company, assess its finances, and this is also known as the balance sheet review. And a simple strategy to examine financial statements to calculate the net current asset value. We call it NCAV of a company. Uh, so the balance sheet is, if you go in depth of the balance sheet analysis, there are a lot of things comes in forward. You need to go for profit and loss account. You need to go for cash flow. There are three types of cash flow. You need to analyze all this to find out the accurate understanding of that company, whether it is profitable or whether, even if it's not profitable, how is the condition of that uh, company. Okay, now the famous value investor Mr. Ben Graham actually created a net current asset value as a way of understanding intrinsic value and whether or not a company was trading at a fair price. Net current asset value is simply the difference between current assets and liabilities and gives an investor a sense of what a company is worth if it had to be liquidated. So Graham recommended calculating NCAP per share and buying businesses if they were trading at prices lower than two-thirds of NCAP per share. Okay? That's another analysis by an expert. Uh, that's supposed to be, a lot of people believe in, and it's most of the cases that is actually. So comparable company analysis, also a method. Many expert does it. Okay. So comparable company analysis or ratio analysis, another method, estimating intrinsic value, and if an exercise where the value of a company is assessed in comparison to the other companies in its industry or sector. Many Wall Street analysts use comparable analysis, judging a company within a peer group across different multiples or metrics to get a sense of whether or not a company is over or undervalued. With this approach, it's important to understand the multiples one uses. Whether evaluating or price to book, earning per share, or EBITDA, that is called earning before interest, taxes, depreciation, and amortization. Okay, you might use multiples such as the PE ratio or price to book ratio to determine is a company's stock price is cheap or costly to buy at. So another tool that investors use to calculate intrinsic values is the discounted cash flow model that is called DCF. So we are not going that part actually right now because it's a bigger thought process too, and it's a bigger it takes a lot of time to discuss this DCF method. So but till now this is all about in a synopsis and brief of how the stock price you can calculate, how we can get the intrinsic value of a company so that you can buy and hold for a long term. Before you do anything, you need a proper research, uh, whether it's worth to you and how much you want to invest in it. Do not put all of your wealth beyond of your risks. The risks you can take. So, till now, this is all about. Subscribe my channel. I will try to make a lot of videos for all of you guys, at least informational or some knowledge base.